Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence. Check out that snow outside. It's a bit of a frosty commute this morning.
A lot of sledding this weekend.
Ooh. Checking in on Bitcoin. Speaking of ups and downs, the CoinDesk Bitcoin price XREX index currently at $37,273. Bitcoin is down about 2% over the past 24 hours. The CoinDesk Ether price ETX index is at 2557. ETH sliding down 2.2%, and the DFX CoinDesk's DeFi index is at 291. Also retreating about 4.2% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. And so we did see a huge fall in the markets, Emily, but Morgan Stanley doesn't think much of it.
Yeah, Morgan Stanley's basically like 50% price, whatever. That's nothing. And they've also pointed out, which I think is a useful fact, that we've seen 15 bear markets since 2009, which is basically Bitcoin's inception. So I think for the long-term crypto holders, all of this just is kind of, goes with the territory.
Interesting. We also have Wonderland DAO, which is continuing to make headlines. And man, over the weekend, the drama keeps building, Lawrence, and impacting markets. I see that we have one of the founders, Danny, tweeting about it, saying that that basically Wonderland had voted. Wonderland experiment is coming to an end. It is clear from the vote that the community is divided. So Wonderland voted.
No, it's not.
Yes, exactly. That's the key thing, and because Wonderland voted on whether or not they should shut down the project. Overwhelmingly, they voted to keep the project going, and yet Danny, the founder, in the last minute, there were some whales that voted and kind of tipped the vote toward to end the DAO. And so Danny said, well, now it's 50-50, but I mean, overwhelmingly, in terms of the users, they wanted to keep it running.
So, we're not supposed to really give our opinions too much here, but this was gross. This was this was insulting. I mean, look,
and it impacted the markets in your view.
Yeah. The way I look at it is this. You had a lot of people who, most people in crypto don't know what's going on with Wonderland. They don't, they have no idea what's happening with time and all that stuff. But you have a segment of the population which has been trading in DeFi and the likes, and they're really grossed out by this. I mean, that's the only way I can describe it. They're really, this was, they feel like they hadn't seen a rug pull like this since Burt Reynolds pulled off his toupee in that movie a few years ago.
Well, on Twitter, we have Crypto Newbie, one of the tweets out there saying, just to be clear, the no vote has won, but you're just picking your own result anyway. What was the point of the vote? And how long will it take you to realize that it's not a split vote? Check out the data. And the data there shows that the community is not split 50-50. The token allocation is the community as individuals voted overwhelmingly no, and against all odds. We got eked out a win.
There's nothing to realize. He already realized it. He realized it, the moment it happened. It didn't matter. It didn't matter how people voted. Didn't. So, all right, so now you have a whole bunch of people who are really freaked out by this, and there's, that's having a negative effect in DeFi. It's having a negative effect in the likes. And look, they got into all these coins and they knew that this was a risk. It's not like this was a complete shock for a lot of people, but they got into it anyway. And now they're freaking out like, oh my God, we just got stuffed with this. Yeah. And so now that the people who aren't necessarily involved, they're
not the best thing.
It's having a negative effect, I think, in the overall market, because they're looking at this and they're like, this is too much. Something bad is happening. We can't quite pin it, and that's really what's happening. As to why we're seeing prices down, I think, in terms of the overall market. But what do I know?
Let's dive further into the crypto markets with our crypto markets guest. The Crypto Markets Update is brought to you by KuCoin. the best place to find the next crypto gem. All right, joining us now to discuss the crypto markets is Rayne Steinberg, CEO of digital asset manager Arca. Welcome, Rayne, to the show. So just wanted to get your overall outlook first on Bitcoin, the crypto markets, DeFi even. What are some of the top predictions you're making?
Sure. Thanks for having me, guys. Yes, obviously, things can turn around quickly in these markets, incredibly volatile and still immature, as we can see in a lot of areas. But we've seen tremendous institutional adoption over the last year. So we've seen a very broadening of the investor base, which really at the beginning of 2021 was heavily retail. And there's a lot more institutions stepping in. And we've seen from our pipeline, and we mainly deal with institutions. So think pensions, endowments, hedge funds, high net worth individuals, that they're looking at this as a place to up their allocations. And they have way smaller than like full bites right now. So we're actually seeing allocations and flows coming into the market.
That's interesting. I've heard other analysts and experts say something similar, and that's why they explain we're seeing a correlation somewhat with the tech stocks and the crypto markets. But after the ICO bubble popped, folks thought STO's security token offerings, a regulated ICO, if you will, would be the next big thing. It didn't really take off, but you also commissioned a survey that suggests there's still hope for it. Tell me a bit about that.
Yes, we're beyond hopeful. These are very long-term things. When you're dealing with regulators, transitions of large asset pools, they take a long time, and there's a lot of players. So I never really changed my view on that, and I thought it was always going to be longer than people thought on STOs. But the survey that you're referring to that we commissioned with Coalition Greenwich, from institutions, financial professionals, market makers, really a broad swath of financial players. We're incredibly bullish on securities tokens, well aware of them, which is, I think you would say, was kind of surprising considering their overall size relative to the general crypto market. And then hugely bullish when they think about the amount of settlement that will be occurring on chain, with 77% of respondents thinking all settlement and basically equity and securities transactions will be occurring on blockchain within 5 to 10 years.
So, Rayne, if I remember correctly, I think it was around 2018 or 2019 where everyone was talking about STOs, like this is going to be the next big thing in crypto, right? And then they just sort of fell off the map. Like people just stopped talking about them. Like I actually haven't heard those three letters in actually a really long time. So what exactly happens? Like why, and are STOs happening anywhere? Because it's just not something you hear a lot about these days.
Sure. There's about 900 million to $1 billion in market cap of security tokens. These trade on ATSs, which are alternative trading systems that are regulated. And the reason you don't hear so much about them is the regulators and the adoption path for this has just been very long. To give you an example, we have the first 40 Act, so the first fund, the same structure as a mutual fund or ETF, whose shares transact on the blockchain. We filed for that in November of 2018, received exemptive relief in July of 2020, so nearly 2 years. And we're still working out things like custody, jurisdictional issues, and all the different difficult things that regulated securities need. So blockchain, tremendous innovation. But when you're talking about going up against centralized regulatory authorities, jurisdictions, these are all just very confusing things that take a long time. This is not, as you guys know, a patient industry. So people just moved on to where the new shiny thing was. But things have still been happening in that space.
Rayne, on the sort of one of the criticisms of STOs, though, was that like they're really not in the spirit of crypto, right? Because like you had ICOs, which obviously didn't go that well, but they at least were decentralized and they were this like radically new form of fundraising. Whereas STOs are a little bit more similar to traditional fundraising, and some people said that that's not really like what's special about it, what's unique about it to crypto. I'm just curious how you address that feedback.
Sure. Yeah, that's exactly right. So when you think about crypto being completely decentralized and not relying on any centralized authority, yes, absolutely. But you also have to look that we're in a centralized world, and that, the lion's share, gigantic amounts, upwards of, hundreds of trillions of dollars are all in the centralized world, regulated in a centralized manner. And with fiduciaries and counterparties that need regulatory clarity. So where people and a vast amount of the energy in the digital asset space is about decentralization and all the benefits of that, from from the discussions that you had earlier, on DAOs and decentralized governance, you see we're not really there yet, and why there's some discomfort from institutions entering in. So we think that this is very much a middle ground where you can get some of the benefits of crypto. That's instantaneous transference, 24/7 trading, infinitely divisible, but not give up all the centralization. And that can be a value proposition that's very important to institutional players who aren't necessarily looking for anonymity, complete decentralization, or any of those things. And we can see from our discussions earlier that we're not quite there yet. And it would be very difficult for an institutional grade fiduciary to participate in some of those things.
So, Rayne, where are the bottlenecks? We have the technology, to quote the $6 Million Man, we have the technology, we can build it better, stronger, faster. But why hasn't it happened the way we thought it would? What's the specific? Is it specifically regulatory? Is it technology? Because stablecoins seem to have figured a lot of this stuff out. Where would you pinpoint the blame, if you will, and how does it get overcome? What specific steps need to be done?
Sure. I wouldn't really call it blame. I would call it more of a feature, honestly, than a bug. And it's really that intersection of regulatory and embedded institutional practices. Just to give you an example of something that I'm very familiar with, I co-founded an ETF company in the early 2000s. This was almost a decade after ETFs had been invented, and they really came out of the 87 crash. And it took till 93 for even as something as simple, and I say simple, the ETF structure is not simple, but it's on an exchange, it's in a fixed place, it was directed by a few controlled players, and that still took 2 years to create. And then even as early as the early 2000s, when I was talking to people about ETFs and traditional asset managers, there was only 40 billion in assets under management in ETFs, and they weren't even sure that structure was going to be the way it went. So that was over a decade after the impetus of ETFs. So when you're dealing with regulated products, and I think that this is very appropriate where the regulators, this is the SEC, has the dual mandate of investor protection, securities offerings, all these things, they have to move slowly, and it just takes a while. And coming from the traditional world, this type of cadence is not unfamiliar to me. In digital assets, if we're talking about anything longer than a week, sometimes, that's too long for people. So I have not been discouraged, and I've actually been quite heartened that this has gone faster than some of our ETF applications in the early 2000s, and this is way more complicated.
Do you think that having Gary Gensler running the SEC actually makes it even harder for it to get through? Is there some hesitancy in terms of other in terms of Wall Street adopting STOs because they just don't know where he's going to fall or how much power he's going to try and take to regulate this entire industry?
No, I actually think it's actually quite the opposite on STOs. As they are regulated, there's less uncertainty there. I would say it's probably had more effect on DeFi, the areas of the marketplace where the regulatory footprint is unclear. But STOs and things like our products are actually now energized because institutions are saying, look, we're probably going to have to face some sort of regulatory footprint here. Let's not just pull the plug on innovation and waiting for something to happen. Let's start innovating in the STO space. And we actually have had quite a lot of success in our labs division, which is our innovation arm, working with partners from very large traditional financial institutions that are looking to take advantage of the STO structure to take advantage of what I said, some of those benefits, instantaneous transference, instantaneous settlement, 24/7 trading, breaking down some of those frictions just without the decentralization because you're still dealing with a regulated product. So that's still going apace. It just, it's very slow. It's not a fast pace. Yeah.
All right, Rayne, thanks for coming on and sharing your insights, and appreciate you coming and talking about the market. So is Arca CEO Rayne Steinberg. Coming up, we'll head over to Taiwan to discuss global crypto strategy with Taipei-based trade tech fintech firm XREX.
posting art on Twitter. I had a physical painting I did, and I made a little website. A few months pass, and I get an email. I love your art. I'm interested in digital assets. Do you know what NFTs are? And I read that, and I was like, what?
And trying to explain to people that we can have these collectible digital assets that you can own. And then the digital assets, like game assets, is also a growing sector.
Remember the ape thing? I was like, oh my God, I need to get in.
Quick check on Bitcoin. The CoinDesk Bitcoin price XREX index is currently at $37,319. Bitcoin sliding down about 1.8% over the past 24 hours. The CoinDesk Ether price ETX index is at 2561, also retreating about 2%. The new DFX CoinDesk's DeFi index is at 292, retreating about 4%. All right, Taiwan's conservative outlook and strict regulatory environment has limited the country from becoming a regional financial hub like neighbors Hong Kong and Singapore. But the government of President Tsai Ing-wen wants to change that perception. That's where XREX, a Taipei-based trade tech fintech, wants to step in to bridge the world using stablecoins. Joining us now to discuss is XREX co-founder and CEO, Wayne Huang. Welcome, Wayne. Thanks for joining us. All right, so you've told CoinDesk that Taiwan is not a global financial hub, but has a robust domestic banking industry. But you want to change that perception. So give us some context and walk us through how you see things changing.
Sure. I think Taiwan, our government's been very friendly to crypto-enabled fintech startups. For example, our startup XREX is directly invested by the Taiwanese government. And our government actually has an observer board seat. And what the government's trying to do with us is it recognizes that although Taiwan isn't really a financial hub in Asia, we do have very robust banking industry, and our banks have very good dollar liquidity. So with XREX, the government is trying to see whether we can bridge Taiwan's banking capabilities, especially pertaining the US dollar, to emerging markets such as India and South Africa through the use of blockchain and cryptocurrency technologies.
Wayne, I'd love to hear your thoughts about just the larger crypto environment in Taiwan. I remember I visited Taiwan a couple of years ago, and there was a minute where everyone was like, Taiwan is going to be the next crypto capital of the world. Like there was all this excitement. And then the excitement died down kind of, like you don't hear about it as much. And I'm just curious, like if you would agree with that assessment and just what the status is now.
I feel the Taiwanese government stays very friendly to the cryptocurrency industry. And a very good move was last year in April, our executive Rayne published a set of regulations against VAS, virtual asset service providers. And it's in effect July 1st. And so finally, it is now a regulated industry. And that's helped us a lot as we try to acquire multiple licenses worldwide. Now, governments see us as being regulated, all of us VASPs in Taiwan.
There's also been some larger changes, though, just in Asia, over the past year or so. Like there was, obviously Beijing cracked down even harder on crypto. We saw mining leaving the region, probably saw some investors also leaving the region. I'm just curious, like, where does Taiwan fit into that? Did it have any impact at all?
Yeah, so there's been a migration for over a year now because it's no news that Beijing was going to ban crypto. And so we saw a huge exodus of cryptocurrency companies, large and small. A lot of them set up their headquarters in Singapore, but at the same time, a lot of them also came to set up engineering offices in Taiwan because of Taiwan's engineering talent pool. So versus just a year ago, we're now seeing many large players that have, within a year's time, recruited over, I'd say, over 100 people from nothing in Taiwan.
So there's kind of benefited Taiwan a little bit, you could say.
Yeah, I think overall it's it's very exciting times. I think it's very good for the talents here, especially talents that have invested in this industry early. Now they're in demand. They have lots of offers. So it's great for the job market here. It's obviously becoming very competitive for startups here. But overall, I think it's very good.
So Wayne, you obviously you have this you were saying the banking system has a lot of dollar liquidity, and you're trying to find a way for it to go to other countries. How much is potential U.S. regulation of the U.S. dollar use on the blockchain, which seems to be on its way to happening, or some sort of guidance coming either from the Biden administration itself or through Congress? How much of that is a concern? How much of that do you think will affect what you're trying to do? Or are you taking a wait and see attitude? Or are you going to just do what, let's say, Tether does, which is, just say, oh, that's nice, but that doesn't affect me?
Yeah, we're paying very close attention. And we see that, we hope that the U.S. regulators get it right. At the same time, we also see it as necessary because stablecoins such as USDC and USDT have become anchors to crypto markets. And if something were to go wrong, it could have a fast snowballing effect. And although these issuers often stress that they're one-to-one pegged to the dollar, but what they mean is one-to-one pegged to their bank deposits. But is the money actually there and available in case there's a huge run against these stablecoins if everybody's trying to redeem stablecoins to the dollar? And I personally would love to see more regulation towards the issuers and also their banks, right? I don't feel that the same fractional reserve ratio should be used when banks take in money from stablecoin issuers because there's no risk model against the behavior of users of stablecoins. And we know that although the stablecoin issuers say that there's one-to-one, but actually we also know that the money is not sitting there at the banks all the time for us to redeem.
So do you, looking at Taiwan itself as well, I mean, do you think that there needs to be regulation on the island itself in terms of how stablecoins are operated and how these things work for your business to get going, more smoothly? Where do you think the regulation really should come from? Do you want to see it mostly from the U.S., from Taiwan, or a combination of both, or neither? I mean, obviously, you said,
I think it must be both, especially. The nature of our business, we service a lot of cross-border small and medium businesses that operate in emerging markets. And so it's best that governments like Taiwan and India and South Africa and Vietnam, they all come up with their own regulation. And then at the same time, we'd like to see also more clarity from U.S. regulators because in a cross-border transaction, when it's fiat, then you need the local banks to agree. You also need the intermediary banks, which are often Citibank or Wells Fargo or Standard Chartered, to agree, right? So we really would love to see more regulation from not only the U.S. regulators, but also regulators of these other countries.
So if you're comfortable with some of the stablecoins that are out there now, are there plans for Taiwan or your company to create a stablecoin based on the dollar reserves that Taiwan does have?
We are not creating our own stablecoin, at least not yet. We're leveraging the different types of stablecoins already available. We're very much US dollar centric. So we're leveraging USDC, USDT, as well as DeFi stablecoins such as DAI.
All right, Wayne, very fascinating. Thanks for joining us and looking forward to seeing how the project develops. So is XREX CEO Wayne Huang. And Happy New Year. Coming up, investing in NFTs, plus the unhosted wallet rule is back. More with CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
You can NFT anything that is inspiring to you.
This space has changed my life.
And then I started looking under the hood. I like the potential and the freedom that the NFT world gives you.
I want to be with the forerunners that are pushing the change to how not just musicians, but how creatives are going to sustain themselves.
In the non-fungible joking show, if this ends up being huge, it would change the world.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk, the State of Crypto newsletter. Good morning, Nick. So it's back from the dead. Former Treasury Secretary Steve Mnuchin's unhosted wallet rule is seeing new life. What's going on?
Good morning. Yeah. So this morning in the U.S. Treasury Department's semi-annual agenda, a once every 6 month document that outlines the agency's priorities over the next half year, is going to list the unhosted wallet rule from December 2020 as something that the Treasury Department will be taking a look at and working on over the next 6 months. But that doesn't mean it's back for sure, or that it's even coming back in the same form it originated. It just means that the Treasury Department is looking at this, and if the folks over there wanted to do something, they will have kind of the cover necessary to do so. It's not just coming out of nowhere and saying, "Hey, we're looking at this." But there could be a number of different ways that this rule could play out. So nothing's for sure yet.
We never quite figured out how this rule came about, right? I mean, we went through the Mnuchin files. It seemed a little bit cloudy as to who came up with it, why they came up with it, and what have you. The fact that it's come back, I mean, what does that tell us? Does that tell us anything at all about how it was created and by whom?
So from what I understand, the people running FinCEN, the Financial Crimes Enforcement Network, which is nominally the agency that's trying to implement this, are not that interested in the rule. This has been a Treasury-driven procedure since the beginning. And what we reported back in 2020 was that Mnuchin, as you said, was personally driving this. And while we didn't see too many emails about that in the Mnuchin files, I'm told that even now the folks who think that Mnuchin was behind this are standing by that story. And so what might be happening now is, it could be Treasury, it could be some folks at FinCEN. I've reached out to FinCEN. I have not yet received a response, presumably because it was the weekend over the last 2 days. But presumably someone has an interest in seeing if there's anything to resurrect here.
All right, Nick. Thanks for keeping a watch on that for us. We'll continue monitoring those developments. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for his newsletter, The State of Crypto, on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
NFT art platform TRM Labs, co-founded by Christie's Auction House, fresh from a $4.2 million funding raise from a group of art and tech investors to expand the company's production capabilities, community, and to support digital artists. Joining us now is Li-Xin-Cohen, co-founder of TRM Labs. Welcome, Xin. So, how have NFTs been doing in a bear market?
Actually, we launched our first project last year in May, and with a Chinese artist, Cai Guoqiang, who is a leading artist in our time. And we did very well. The auction went for realized 2.5 million US dollar. And after that, we go on with, did another second drop with him, which is a TR Lab Genesis project, and everything sold out within minutes. So right now we are at the end of our current project, AI 2041. We commissioned leading digital artists inspired by the book, and everything had been sold out. So it's been doing very well for TR Lab.
So Xin, how is Christie's involved? What are they providing TR Lab with in terms of support and marketplace? And what does that tell us about the approach of the traditional art collector?
So Christie is our media partner, marketing partner, and it's been very supportive since the beginning. So because of my role in the traditional art world and now with the TR Lab, so I'm able to bridge the both worlds come together. And for example, with our auction model, so we use a similar like collector outreach as Christie auction. When we have an auction, we have to reach each collectors. But with the limited edition, it's more about community building. So in that sense, you know, it's everybody come to our Discord, and we've been growing our Discord and Twitter members. It's right now combined almost 10,000 members from zero a few months ago.
So how is, you know, when you mentioned before that Christie's was providing some of the marketing support and what have you, that are there any geographic markets that are targeted for this? Is it global? Is it demographic targeting? Like where are you targeting your auctions?
It's a global. Our platform is a global platform, so we aim to cultivate art for the new generation, discovering and collecting NFT artworks. And so with the Christie partnership, mainly it's hyping us, you know, bring the awareness on Twitter, on Instagram, on WeChat. WeChat is to reach the Asian market.
Oh, Emily, you're on mute.
I'm not on mute. Can you hear me?
Yes.
Yeah. What do you see as some of the big NFT trends for 2022?
Definitely, it's more creativity and more people interested in art. The NFT is introducing a new generation of collectors and the new audience into the collecting community. So actually what we need for the NFT market to continue to grow, doesn't matter if it's a bear market or bull market, is a more fun art project that curated around the compelling ideas and experiences. So these are the projects will last, you know, long for years to come. And that's what collectors are looking for, and what TR Lab want to bring it into this new space.
Xin, you had experience in the traditional market. So what do you think that this is taking away or stealing some of the thunder from traditional artwork that's sold, or is it adding to it? I mean, everyone's going to say, oh, it's a little bit complimentary, but really, is it complimentary, or is it attracting a lot of attention and capital away from what we're used to in the art markets and putting it into NFTs now?
I actually see it as a coexist, because who are collecting NFTs at the moment are the younger generation, the new generation, especially coming from crypto, and who become wealthy in the last few years. And they are the majority of collectors. And then the younger people who are coming in collecting like the bored apes. And I actually see this whole movement introducing the generation into the art community, collecting community in general. And actually, they come across with each other. And that's what TR Lab want to do, to bridge the traditional and crypto world together.
So, in the traditional world, the auction houses cultivate a relationship with the collectors, with the major collectors. Are you finding yourself having the same kind of relationship with the NFT collectors, or is it something a little bit different? What are you noticing as the difference between the NFT collector and the traditional art collector that we've experienced for thousands of years? Feels.
With our one-on-one and Taiguoqiang first job, we actually have the same approach, the same outreach with the collectors one by one. And with the traditional collectors, right now, there's many people actually calling me, and, they either already started collecting and ask what TR Lab's next job, or they want to learn and they want to see who are on our artist pipeline and if there are artists already in their collections, because we work with the traditional artists and the digital artists. And so in that sense, it's very similar. They either contact you, like at Christie's, the collector come to Christie's, or we reach out when we know there's some artists, could be in their collection. But with the limited edition, it's all about community building. And in our Discord, we have active members, and we also devise process, which we did with our AI 2041 last project. And we release artist quiz every week. And so the members on the Discord, they really enjoy to do this GameFi approach. And so they have the early access to get the artists' work they want. And so this was the signature of our TR Labs approach to the community. And we want the community members to learn to bring awareness of what they collect, what artists they are looking for.
All right, we'll wrap it there. Xin, thank you so much for joining us. Appreciate your insights. That was TRM
Thank you very
Labs
much.
Co-founder Li-Xin-Cohen. All right, that's it for First Mover. Thank you, Emily Parker and Lawrence Lewitton. I'm your host, Christine Lee. Be sure to check out The Hash at noon Eastern and All About Bitcoin at 3 o'clock. You're watching CoinDesk TV.